All right, week in review. Here we go. This is for week of March 10th, 2025. Major U.S. indexes posted another negative week amid ongoing trade and tariff uncertainties. The S&P 500 fell for the third consecutive week, down 3.06%, its largest decline since September 2024. The Nasdaq also dropped 3.43%, while the Dow Jones lost 2.33%. Bond yields, however, climbed, with the 10-year Treasury reaching 4.32% on Friday and pushing bond prices down about 0.5% to 0.58. Tariffs remained in focus, as proposed 25% on Canada and Mexico did go into effect. However, the White House then rolled some of those back, especially those in connection with automobiles. And additionally, new 10% tariff on Chinese goods took effect, which, as we previously spoke, was an addition to what we already had on there. And then Friday's job report signaled moderation, with job gains slightly above last month's reading, but still below expectations. The unemployment rate ticked up to 4.1% for February, not yet reflecting federal government layoffs, which further will weigh on kind of that job growth outlook. And then we have upcoming economic releases. So key economic report this week offer insights into inflation and the labor market. For example, the Consumer Price Index, or CPI. This is due to come out March 12th, Wednesday, tomorrow, followed by the PPI, or the Producer Price Index, which comes out on Thursday, March 13th. Both measure inflation at different supply chain stages. Additionally, the JOLTS report will be released today, on Tuesday, March 11th, which provides further insights into the labor market as a whole. Now, let's go into a market outlook scenario. Given a potential slowing of the economy and rising policy uncertainty, markets are reacting cautiously. With major U.S. indexes currently down for the year, investors continue to shift to more defensive stances. As value stocks extended their recent outperformance over growth stocks last week, the Russell 1000 value declined 2.4%, while the Russell 1000 growth fell 3.94%. This is a huge reversal from growth's leadership over the past 2 years. All eyes will be on Wednesday's CPI report tomorrow for signs of whether the hotter than expected inflation trends persist from February into March. January's core CPI, excluding food and energy, came in above expectations at 3.3%, which is still above that Fed's goal of 2%, right? And then we got two major stocks in the news, right? So Costco, COST, reported an earnings miss last week, showing that consumers remain really cautious about spending, and the stock then fell 7.8% for the week. The next stock we're going to talk about is McDonald's, MCD, reached an all-time high last Friday as investors are looking towards value given uncertainties in the market, and the stock ended up 5.5%. That's your market recap.
Stay informed as markets react to inflation and trade uncertainties.